Hello and welcome to Fintech for Dummies, the home of financial technology. In today's video, we will be looking at what Fintech is and where it is used, and hopefully give you a better understanding of this exciting innovative field. Fintech is the joining of two words in order to create a new word which refers to a single concept, also known as portmanteau, and in this case is the combination of the terms finance and technology, and refers to any business that uses technology to enhance or automate financial services and processes. Fintech is a rapidly growing industry serving both consumers and businesses. It involves mobile banking and insurance to cryptocurrency and investment apps. Fintech has broad applications and is continually evolving and becoming more advanced. At its core, Fintech is utilized to help companies, business owners and consumers better manage their financial operations, processes, and lives by utilizing specialized software and algorithms that are used on computers and, increasingly, smartphones. The fintech industry is huge. According to a source at CB Insights, there are 41 venture capital-backed fintech companies worth a combined $154.1 billion. This is according to the 2019 statistics, as the 2020 COVID-19 pandemic has rattled both public and private markets globally. VC-backed fintech startups are no exception. Across the board, fintech funding activity stalled in 2020 as the coronavirus outbreaks forced investors to pull back investments. The source is referenced in the description if you would like to have a look at it. One driving factor for fintech is that many traditional banks are supporters and adopters of the technology, actively investing in, acquiring, or partnering with fintech startups because it is easier to give digitally minded customers what they want, while also moving the industry forward and staying relevant. Therefore, it can be confidently said that the growth of this sector will continue. Now you may be wondering, what is a fintech company? A fintech company is a company that integrates technologies such as AI, blockchain and data science into traditional financial sectors to make them safer, faster and more efficient. Fintech is one of the fastest growing tech sectors, with companies innovating in almost every area of finance, from payments and loans to credit scoring and stock trading. How does finance technology work? Fintech is not a new industry but is one that has evolved very quickly. As technology has, to some degree, always been part of the financial world, whether it is the introduction of credit cards, which happened in the 1950s, or ATMs, personal finance apps and high-frequency trading in the decades that followed. The workings behind financial technology varies from project to project, and application to application. Some of the newest advances, however, are utilizing machine learning algorithms. This is the use and development of computer systems that are able to learn and adapt without following explicit instructions, by using algorithms and statistical models to analyze and draw inferences from patterns and data. Secondly is blockchain, which is a system in which a record of transactions made in Bitcoin or another cryptocurrency are maintained across several computers that are linked in a peer-to-peer network. And lastly, data science, which is an interdisciplinary field that uses scientific methods, processes, algorithms and systems to extract knowledge and insights from many structural and unstructured data, to do everything from process credit risks to run hedge funds. In fact, there's now an entire subset of regulatory technology dubbed regulatory technology, or more commonly known as RegTech, designed to navigate the complex world of compliance and regulatory issues of industries like fintech. Though the industry conjures up images of startups and industry-changing technology, traditional companies and banks are also constantly adopting fintech services for their own purposes. Let's have a quick look at how the industry is both disrupting and enhancing some areas of finance sector, and hopefully give you a better understanding. Firstly, let's look at banking, as it is an area that is used by a large part of the population. Mobile banking is a large part of the fintech industry. In the world of personal finance, consumers have increasingly demanded easy digital access to their bank accounts, especially on a mobile device. Most major banks now offer some kind of mobile banking feature, especially with the rise of neobanks. Neobanks are essentially banks without any physical branch locations, serving customers with checking, savings, payment services and loans on a completely mobile and digital infrastructure. A few examples of this are Chime, Simple, and Varo. Fintech is having a big impact on banking, and it's getting even bigger and becoming more and more advanced. Running parallel to fintech is the birth of cryptocurrency and blockchain. I'm sure by now you have heard about cryptocurrency and blockchain, as they have become a much more popular talking point. Though both are different technologies considered outside the realm of fintech, there are complementary applications in which all three can work together to deliver new kinds of financial services. This is how finance is embracing blockchain, a technology meant to disrupt the finance industry. Firstly, in the investment and savings realm. Fintech has caused an explosion in the number of investing and savings apps in recent years. More than ever, the barriers to investing are being broken down by companies like Robinhood, Stash, and Acorns. While these apps differ in approach, each uses a combination of savings and easy, small dollar investing to introduce consumers to the markets. The machine learning and trading sector. Being able to predict where markets are headed is the holy grail of finance. With billions of dollars to be made, it is no surprise machine learning has played an increasingly important role in fintech. The power of this AI subset lies in its ability to run massive amounts of data through algorithms designed to spot trends and risks and therefore give that step up above the competition. Next is payments. Moving money around is something fintech is very good at. The phrase "I'll PayPal you" is now a replacement for "I'll pay you later." PayPal, of course, is a go-to mobile payment platform. Payment companies have changed the way we all do business. It is easier than ever to send money digitally anywhere in the world. In addition to PayPal, popular payment companies include Zelle, Venmo, Stripe, and Square. The lending sector is up next. Fintech is also overhauling credit by streamlining risk assessment, speeding up approval processes and making access easier. Billions of people around the world can now apply for a loan on their mobile devices, and new data points and better risk modeling is expanding credit to underserved populations. Additionally, consumers can request credit reports multiple times a year without dinging their score, making the entire back end of the lending world more transparent for everyone. Now let us look at insurance. While InsurTech, which is InsurTech, refers to the use of technology innovations designed to squeeze out savings and efficiency from the current insurance industry model. InsurTech is a combination of the words insurance and technology, inspired by the term fintech. It's quickly becoming its own industry. It still falls under the umbrella of fintech. Insurance is a somewhat slow adopter of technology, and many fintech startups are partnering with traditional insurance companies to help automate processes and expand coverage. From mobile car insurance to wearables for health insurance, the industry is staring down tons of innovation. So as you can see, fintech is a rapidly growing industry and is worth investing time in getting to know more. Thank you for watching. We hope you enjoyed and found it informative. Please like and subscribe not to miss out on more.